Good to be here.
So you're in the camp that says it would be unwise to make major changes in your holdings because of this tariff fear.
Yes, we are. We think it's a steady state at this point because no one really knows from one day or 1 minute to the next what's possibly going to happen and what reaction and what levels any of that will be.
It's interesting. John Alder, the Bloomberg columnist, arguing here that the markets aren't apparently taking Trump's tariff threats seriously right now because the latest measures he talked about have no date or details.
Yes, that's true. And I think whatever was out there was extended to March 4th. And of course, we have the budget issue here in the U.S. that needs to be resolved by March 14th. So there's a good chance that whatever it is will be pushed out further. Is this a negotiating tool? The markets seem to be thinking that, if it's more than that, maybe we will get that reaction in the market that some have been calling for.
Some stocks of interest to us that you follow include Shopify. You like the look of this technology name?
We certainly like the business in terms of enabling retailers to retail, if you will. Really came into their own during the pandemic from the standpoint of that ability. It's not a cheap stock at all on a price to earnings basis, and the stock's had a very good move off of its relatively low a couple of years ago. But we do like what they're able to do for their customers. It's actually very ingenious the way they allow the retailers to manage their business.
Right, and the stock getting back up towards its record high of more than 2 years ago in Toronto. Another stock on your radar is Celestica. Tell us if you see potential there.
Sure, it's not a very widely followed name here by our firm or in the U.S., I don't think. They were spun out of IBM in 1996. Onyx bought them in, I think it was 98 or so, and then they went public. Stock hit an all-time high in 2000, and it's kind of languished for a couple of decades. But they've really hit their stride recently, where the stock's gone from 10 to 130 in the U.S. over the last 2 years, given the fact that they are a major beneficiary of AI and data center build-outs.
Yeah, and the stock going vertical. I mean, the big question, I guess, is will the AI spending continue? And I know that the electric companies were saying this week in the U.S., we see no sign of a decline in interest in building data centers.
We've heard that as well. And then you've got the pipelines and so forth, like KMI and Energy Transfer and Williams. They've all been parroting the same thing, that they don't see any slowdown in terms of demand for electricity and the need to build these data centers despite the DeepSeek news. So, we'll see. The big companies have certainly come out with, I think the number is $320 billion or something for this year they're going to spend on CapEx. That's a huge number when you think about it.
Another idea that you have for us is Alphabet. Now, that one's come off at its highs. I think there are concerns that their lead in AI could be eroded by this the rise of these Chinese models. But tell us what your view is on Alphabet.
I mean, it's such a big company, powerful company. Obviously, there are the threats on the regulatory side, not here just in the U.S., but other places. The issue is they spent $52 billion last year on CapEx, planning to spend $75 billion this year. Some investors think that where are the returns going to come from all of this spending? And of course, that's a forecast. They can always pull that back, such as Meta did a few years ago. And so you could see something like that. But we think this company trading at 18 times this year's earnings and 16 times next year's forecast earnings is below the multiple of the market, and we think the growth is there. That they're smart operators. We think they'll be able to figure this out in terms of AI.
Another name you like, I believe, is Progressive Corporation. Tell us what attracts you there.
Sure. For those who don't know, Progressive is the insurance company which features Flo in the advertisements. And her team. have been a highly, highly successful advertisement campaign. This company is here in the Cleveland, Ohio area, and let's say they have a 1% market share 20 years ago or so, and now it's up to 14, 15, 16%. Wow. Because they've been just stellar at using technology and being able to dial up the marketing spend versus the claims. They aim to have a 96% combined ratio, and they've done a great job of meeting those numbers over decades.
Another idea you have here for us is TradeWeb, TW on the NASDAQ. What do they do, Greg?
Great question, and we think it's a great company. They participate in the electronification of the fixed income and other markets in terms of rates, credit, equity. They have a data business as well. This is a company with 58% EBITDA margins, up from 51% a few years ago. Great cash flow, great free cash flow, great balance sheet. There's only a 16% market share here. We think as time passes, more and more and more will be done through systems rather than over the phone, and TradeWeb certainly stands to benefit from that.
Greg, before we let you go, you're based in Ohio, and which of course is one of our Great Lakes neighbors here in Ontario. I know it's hard to read, but how do you think people in a border state or so close to Canada feel about Trump's rhetoric against this country on the trade front?
That's a great question. I mean, we are in Ohio, but being in Cleveland, we're in the middle part of Ohio, so would have to swim across the lake to get to Canada. Yeah. You know, I think the people in Toledo and Detroit would have maybe more feeling because I'm sure there's more cross-border activity. I think a lot of this is rhetoric. I mean, we know what Trump has said in the past, and he's doing it again. So for good or for bad, this is what we have for the next 4 years.